Hey folks, Siam here, back for another macro metrics video. Now, I could literally every day or every week, I could just focus on all of the businesses that are going bust, how many jobs are at risk, all that sort of stuff. But I think you don't need me to sort of remind you of that. I mean, it's happening all the time. I mean, Debenhams, Gerald's, there's so many big companies that have just gone bust. But I found something. I came across actually something which someone posted something in my trading community of an interesting announcement the other day, which I think gives us a little inkling of what's to come over the next 6 months or so. And it's this. So yeah, thanks for trader Jordan Cooley for spotting this. So if you click on this, and then let's just open it in Chrome. And then scroll down to July and look at the minutes that was released on the 19th of August. Download the PDF again. Here we go. So it's not a long PDF, it's only 13 pages. I have read it. Basically, they're obsessed with the 2% inflation figure. Like as they can see, yeah, like here. Participants also noted that a highly accommodative stance on monetary policy would likely be needed for some time to support aggregate demand and achieve 2% inflation over the longer run. Basically, I mean, this has been the same for years. They're really scared of monetary deflation, so they're trying to maintain a steady Goldilocks sort of zone of 2%, but I can't see that happening. I mean, I see it sailing straight through. But if you go all the way to the bottom, to basically where it says the conclusions and yeah, what they're going to say, they're basically keeping rates as low as possible, so 0 to 0.25%. Earlier on they said they'll do that for as long as it takes, and they're just continuing basically buying up bonds, etc. But look at this. The Federal Reserve is committed to using its full range of tools to support the US economy in this challenging time, thereby promoting its maximum employment and price stability goals. It's caused loads of problems, yada yada yada. In determining the timing and size of future adjustments to the stance of monetary policy, either 2%, the committee will assess realised and expected economic conditions relative to its maximum employment objective and its symmetric 2% inflation objective. Yada yada yada. To support the flow of credit to households and businesses over coming months, the Fed will increase its holdings of Treasury securities and agency residential and commercial mortgage-backed securities, at least at the current pace, to sustain smooth market functioning, thereby fostering effective transmission of monetary policy to broader financial conditions. Oh dear, this is basically them booming, like the commercial property everywhere is FUCKED, and all they're doing is that the Fed is buying everything up. They're buying up all of these. It's going to be junk. It really is junk. You have all these massive office blocks going empty. You have all these buildings being defaulted on by the tenants, as in the commercial tenants. Yet the Fed is going to be buying up residential and commercial mortgage-backed securities. They are basically starting to inflate another subprime bubble here. So what does this mean? This is basically signaling to the world that the Fed, at least for the next 3 months or so, are going to continue its course. So continue, if not accelerate, the amount of things that it's buying, and just propping up the market. And because of the huge correlation between indices and most other markets at the moment, what this means is everything is risk on. So when it's risk on, Aussie yen goes up, so go long on the Aussie against the yen. Indices will continue to trickle up, and because of the correlation between indices and bullion and crypto, gold and silver and crypto will continue to eke up as well. However, there is always a however. In investing, everything is a seesaw, and you always have to balance the seesaw, or see which way it's slightly more balanced and then make a decision. So if we have a look at the dollar index, that shows us something slightly different. Okay, so if we just pop up TradingView, I know this is on my phone, so the chart's going to look like a bag of balls here. But this is the dollar index. So this effectively just shows you the dollar strength on its own, not compared to, the euro or anything, just the dollar index. So since 2012, we've had a rising dollar, okay? So things are stable, dollar stability, etc. And we've recently had a bit of a tumble. So as you can see, there's this massive trend line that it's been caterpillaring up, and it's just broken it. Now, with breakouts like this, you have to be very careful, because I would say 85 to 90% of the time, you'll always see a pullback to kiss off the trend line. So I guess you could also say that there is maybe a potential sort of support level around here. Excuse my big fat thumb. And so what's likely to happen is that the dollar index should pull back to at least 12,200, or if not 12,400, all the way back up to kiss off this level. And so typically what happens is this: you'll see a market pull back and then continue to piss off. So yeah, sorry, I just need to get rid of my I keep drawing things. Oh my lordy lord. Anyway, so what does this mean? This means that in the short term, especially when you look at what's posting at the moment on the weekly chart, if you can see here, there's a bit of indecision and also a massive low test candle, which is a reversal. So this also is saying on the weekly chart things should be going up over the next few weeks. So when we jump into the daily chart, what does this mean? Obviously it's just got doodles all over the place now. What this means is that if we have a pretty strong dollar rally in the short term, we're going to see a little tumble in everything else. So if the dollar rises, what we'll see is stocks tumble, gold and silver tumble, crypto crumble as well. Which I think actually makes a bit more sense. I think what may happen is that we may have a little surge up here. Things have a bit of a pullback, so another buying opportunity for like Ethereum or Bitcoin, let's say, and then they'll probably start pumping a bit more, as in the Fed, and then it's quite likely we'll see, you know, a continuation of the dollar bouncing off here and then continuing to head down. But again, it's hard, but hopefully this makes some sense. And until then, the economy around the world is going to continue crumbling, and there is no V-shaped recovery. Yes, the stocks have recovered, but the economy has not.